Okay, welcome everyone. Today is October 1st, Thursday. Now, Michael Boutros, it's good to be with you guys here today for this NFP intraday strategy webinar. We got a lot to go over today, so keep your questions coming as we go through the session, guys. If you have any questions or trade setups you'd like to take a look at, we will delve right in. First things first, let's take a quick look at what the dollar index is doing as we head into today's session. Relative performance so far looks like this. You have the Aussie and the Kiwi, really strong move in the broader commodity block. We highlighted some of these moves in yesterday's intraday strategy report, specifically on the Kiwi, which still looks higher, at least in the near term, coming to some resistance here. Aussie haven't really messed with by way of Aussie. Euro Aussie looks pretty good, and the CAD here with a downside stretch of 0.3% on dollar CAD. Dollar CAD looks phenomenal. It's certainly responding very well to that major resistance that we talked about earlier. So we will definitely take a look at that. Oh, some comments coming through. Merdad, great to see you. Eileen, always a pleasure. Mario. Dale saying, good morning. Mike, do you know what's going on at FXCM? Can't trade, can't log in, can't reset the password, and can't get anyone on the phones. Thanks. Yeah, Dale, there was an issue that happened last night. They're working to resolve that now. I'm in the same page you are, actually. So I actually had an open position on Sterling Yen, so I hope that limit is hit by now. But they are working to resolve that, Dale. I know that the reset password page is just being under maintenance, so that should be up momentarily. But no concerns on that front. Mark, Euro Aussie says trigger at 5:45 a.m. today. Nice. We'll take a look at that. Mark also wants to take a look at Kiwi Dollar. Got stopped out right before the 100% retracement. It happens in these market conditions. I want to take a moment. Hey, Dale, you're more than welcome, man. Appreciate that. Matt, great to see you. I want to take a minute and just say this, guys. During this market condition, when you come into NFPs, FOMCs, major market risks, especially when it's on the first day of the quarter, first day of the month, you want to be a little bit more cautious. Liquidity tends to be kind of thin. You get a lot of back and forth action in price, and just nimble is the name of the game. You know, for the last 2 days, I've continued to try to stress that on the intraday reports. But just telling you to be nimble. You know, it's the best time of where you see those massive swings and you want to jump on, you want to see continuation, the market just pulls right back. There's not much liquidity behind it. So use some caution. Intraday strategies tend to be very, very tricky during this time period. But certainly heading into tomorrow, you have some really sweet setups. So we're going to look at those today. We'll get ourselves all geared up for tomorrow's NFP print. Here's what the equity market looks like so far today. Europe is kind of mixed, lackluster. Asia actually had a pretty decent session. You had Shanghai index up 0.48%. That's on massive losses this week. So far in Europe, again, a mixed basket of performances. U.S. equity futures look to open higher on the day. So if you guys caught Jamie's webinar yesterday, he was going over seasonal tendencies and where the SPX is trading and how that translates into our biases on FX expectations for continued move higher here, right on par. Morning MB, when you get a chance, can you please look at my nemesis, your abomination dollar yen? Thanks. Gary will definitely do that. It's in consolidation, man. We listen, we'll get a break of it at some point. You know that we've been following it on daily on SB here for the last couple of weeks on the intraday charts. It hasn't been there for the last couple of days just because we've fallen into a complete clear-cut range, and it's a contractionary range. So even on a scalp type of standpoint, you know, your targets need to be all inside or above the previous lows and highs. But we'll take a look at that in a couple of minutes. Let me just get through these scalp setups. First things first, on tap from yesterday's setup was Euro CAD. Coming into a very interesting area. Here's what EuroCAD looked like yesterday on the daily charts. So if you guys remember, last week we played this rebound, and this was a rebound off of the monthly open, which comes in at 47.17, but it also was a very nice clear-cut confluence of just a basic trendline support off the yearly low from April and the lower median line parallel. Gave us a really nice rebound into resistance. Well, there was no resistance here. The resistance is now the high day close, excuse me, at 50.95. But you get the picture. We couldn't make it back above. Here's failure, and here we are again. Major key support into 48.20. That's where about we are right now. Okay. Also, look at the momentum signature. Since the start of the month, despite the uptrend or despite the attempt to break into new highs, momentum unable to face 60 on every rebound. So it tells you that we could be seeing momentum start to turn over here. Near term looks even better. Looks even better. Here's what it looks like for EuroCAD on the near term. Here's where we were yesterday. All right. So we were sitting on the the weekly opening range low, which was 48.69. You had a basic 50% retracement of the advance that takes you into 48.77. It's exactly where we were sitting. Interestingly enough, if you bring up a real near-term chart, the opening range for Asia essentially was setting up right there. And the downside break that we saw here about 10 o'clock really opened up the move into the next primary objective, which was down at 48.11, 48.15. I think we quoted, or just above the 48 handle. So this region right here. So what I wanted to point out on this chart, guys, was this median line formation off the high. As I noted in the report, it was too soon to tell if this is really in play because we hadn't gotten a clear-cut tag of resistance or support yet. Here we are sitting on that median line right off the highs. Confluence with the 618, a little bit more of a critical nature, and you're getting some divergence into the lows. So wouldn't necessarily be interested in going long EuroCAD. Rather, if we do get a rally, be looking to get back in short. The immediate downside bias, you'd want to start looking for short triggers right up into 48.70 again, the former opening range low. So an objective way of looking at price action, we stretched into a high on the Monday, Tuesday stretch. You break the lows, you look for that late week low. Okay, beyond here, on the downside, you're looking for a 764 retracement that takes you into 47.30. And then a nice level here at 46.60 is the swing lows that you made for early September and a basic 88.6 retracement of the advance. Bearish invalidation, okay, gets dropped down now to 49.50. Okay, so yesterday was at 150. We'll drop that down to 49.50. Again, the immediate resistance, you'd look for 148.70, 148.77. Yeah, Graham, will definitely take a look. Graham, are you having any issues with the webinar? Are you saying bad day for Safari users on on your Citrix app? I hope no one's experiencing any issues with the webinar here, but do keep me updated if you see any issues. We'll definitely look over Aussie Kiwi as a piece I put out yesterday also. He says there was a Safari update today. Eileen saying AV is still great. All right. So for EuroCAD, heading into the start of U.S. trade, you are at risk for a little bit more of a rebound. I really wouldn't do anything on the long side. Again, personally, if you get a compelling trigger, maybe into 48.70, but I'd really be looking to sell rallies. If we break lower, like I said, the clear-cut targets are there. I do just want to highlight, if you zoom out enough on this, let me snap these trend lines for you. There was the confluence that caught the low last week. There's a confluence right now that we're below. Okay, so even on a rally stretch, the reason I wouldn't really be interested in trying to play that is because you're still going to come up into these same median lines again, right ahead of the weekly opening range low. So keep that in mind. And as I said earlier on the daily chart, I mean, if we close below this, watch today's close, you're looking for the monthly open at 47.16, 47.17. That comes in line dead on with the 50-day moving average today. And then 49.50 or 45.90, excuse me, is a 38.2 and the monthly opening range low. One other thing, in case you guys haven't gotten enough notes yet. He says, I had to re-download Citrix, but AV is good. All right, Graham. One other thing is look at the momentum signature. When we're trying to ascertain whether this thing is making a turn or not, just look for major breaks of levels that we haven't cleared. For the last 5 months, essentially, Okay, we have not broken sub 50. And that last month that we were sub 50 was the yearly low. Okay, we pop above it in May, test 50 support, hold, 60 break, 50 support, hold, 60 break, 70 break, even more bullish. No 50 breaks yet. Okay, so if we make it below the monthly open, we make it below 15 momentum, that's an inherent change in the momentum profile. And as such, you would expect to see a little bit more weakness targeting those downside targets. So heading into US trade, just watch that resistance, or excuse me, watch that support level that we're at. If we get a nice rebound and an opportunity to get back on the short side, might be a decent trade. On the 5-minute chart, let's take a quick look on where we stand for Euro CAD. See how long that trigger holds. Actually might set up for a decent trade. If we crawl a little bit higher, you can get a stop against that high. Remember, it's a 43 pip ATR, so you're looking for about 40 pips per scalp on this one. Might be a good opportunity to try to press this again. But ideally, that would be sort of a nice place to start to look. All right. So that's EuroCAD. We will continue to watch this specifically on the back of CAD strength. Okay, we went over the relative performance for the CAD today is pretty decent. In fact, if we take CAD relative performance in and of itself, it looks like this. Okay, so you can see that still stronger against most of its counterparts. Excuse me, dollar down 0.28%, but you get the picture, right? And in fact, Euro, Swissy is not a fan of me for trading, but Euro is going to be one of the biggest losers against the CAD that we've seen so far today. So expect some kickback, but still favoring the downside sub 149.50. All right, next up on tap from yesterday was the Kiwi Dollar. I know a lot more of you were interested in this. I don't know if Mark McDowell, if you're in the room, we were talking on Twitter last night. I didn't take anything on Kiwi. There was an opportunity to get back in European trade. And in fact, right after we spoke, I had jumped into a sterling yen position, which I'm pretty sure got taken out at limit. But again, I can't necessarily check at this point. So Kiwi Dollar looks like this. Well, yesterday's daily chart, we just highlighted this major region, 64.13, basic longer dated 618, but more importantly and more objectively, just the median line off the low was coming right into that region. Here we are right here, probing through, continuing to push higher. Remember, we've been broadly trading within the entire monthly opening range, never broke. We're in October trade, new month, new quarter. Here's what it looks like to open up things. Just some basic median lines off the low just from the last 2 weeks. So if we just took that basic trend line support, remember 2 tags of support is speculative, 3 tags is validated. This has 4 tags. Mirror that to the low that we made this week. You could see we're roughly following the same slope. Yesterday's bullish invalidation was marked right down here at 63.70. At this point, we're going to go ahead and raise that to the 64 handle, essentially the 64.08. Okay. Topside targets that we noted yesterday, which was 64.30 and 64.53. 64.30 came out, 64.53 came shy just by about 5 pips here. Okay, and we are turning over a little bit. So where do we go from here, Mike? I just want to say one thing. 64.50 is really, really big. This is not only just the monthly highs and the opening range high for September, but it's also an exact 100% extension off the lows. So you can see a scenario where we pivot again off that median line, find a nice rally into this region. Then you see a little bit more of a substantiated press lower. But in general, starting to look higher on Kiwi. And as Jamie said yesterday in the webinar, guys, watch risk. You know, as long as risk remains well supported, the dynamics for these trades will continue to pan out. If you take a look at the Aussie today, That's also came right into the target that we talked about in Tuesday's webinar. That was what 70, 68, 70, 70. Basic 38.2 off the high, and a basic median line off the low. So watch the com block. This is also going to bode very well for the dollar CAD position, and it should offer us some nice definitive breaks as we head into tomorrow's non-farm payroll print. We want to cover all the dollar trades today here, guys. So I see some more questions coming through. We'll get through as many of those as we can. I do want to get you through the dollar crosses so everyone, if I can find my pen, everyone has a clear-cut picture and trade plan for tomorrow. So a quick reminder of what we're expecting. By the way, we just got initial claims a little bit bigger than expected there. Bigger event risk later today is going to be the ISM manufacturing. Just as a quick heads up, we're expecting a print of 550.6, down from 51.1. Remember, ISM comes on a gauge. 50 is going to be no growth. Sub 50 is going to be contraction. Above 50 indicates expansion. So certainly a slowdown in the expansionary pace here for ISM manufacturing, and that comes out about 10 o'clock today. Non-farm payrolls has been revised down by just a couple of points here, not by much. We were looking at 205 earlier in the week. Expectations have now fallen to about 200. Again, anything 180, 210 is going to be broadly in line with expectations. Okay, last month's print was 173. Remember that. So we'll also be looking if we get any revisions to it. But broadly speaking, we've been pretty decent. Pretty much a mean of 200 plus, data prints as far as NFPs for the last 2 years. So we'll continue to see if that theme holds as far as labor markets here in the United States. Obviously, we've talked about it here in the webinar. The biggest problem for the Fed right now is not employment, rather the inflationary outlook. But certainly if we see employment start to slide, that's going to put an even bigger dent in expectations for liftoff this year. All right, so for the Kiwi, looking for a pullback. See if 64.08 holds a support. We'll be looking for down triggers down here. Major resistance, what we were looking for on this stretch was 64.53, 64.55. Again, nice confluence resistance there. Beyond that, if we do break to the upside, there's really not much. 64.75 would be a soft target and a 50% retrace. Let me take that down to the new low. Sorry about that. 64.70 comes in just above. And beyond that, what I wanted to highlight was 65.25, and that's the 618 retracement of the entire decline off the August highs. So you definitely want to keep that in view. Quarter of the daily ATR yields about 22 pips, so it's a little bit tighter than we like to see as per our scalps. But if you get an ideal entry like Jamie did last week, on the way up, you kind of just want to peel a little bit off at these profit targets and move your objective up. This could be the onset of a larger move to the upside if we do clear this on a close basis today. Also note daily momentum right into the 50 level. Just like we were talking about in dollar CAD, we haven't seen a 50 break to the upside since May. So certainly that would be a change in behavior, and with a break of the September highs, would certainly validate a near-term reversal here in Kiwi. Questions on Kiwi Dollar? So Mark, when we were talking yesterday, here's where we were. And I told you, listen, if we're not already long, there's really not much to do here. I would like to get long on a pullback, and we even talked about 63.70. You didn't quite get down there, okay? You got momentum coming into 50, it held, and then actually on a intraday prospect on that rally, was this the early European trade session, there was a pretty compelling trigger I was looking at this morning. That's a trigger that would have started to make me shift my bias to the upside against the lows, looking for about 22 pips. You're more than, well more than that designated profit target at this point. All right. And actually, this is the trigger I just put on this morning when I came in. It looks like we just gave out. So look for that pullback to find some support into the 64 handle. Oops. That was the EuroCAD setup. Sorry about that, guys. Here was the Kiwi Dollar trigger. Okay, let's jump into the radar charts real quick, and then I want to take your questions and go over sort of thought process going into tomorrow's NFP print. So the radar charts last night, I've actually been a little bit more active on the radar chart setups than the updates, guys. So keep them all in the menu. These are setups that we want to cherry pick during these time periods, as I noted. So first up is the Loonie, which looks like this. All right, so it feels like we've been talking about this region for like months, and maybe we have. I can't remember. I'm a near-term trader, so my memory doesn't. I focus on the short term, but look, 3460 on the intraday chart, it comes out at 3457, I believe, the 618. Just a difference in pip and high and low there, but in any event, huge confluence region of resistance, and that's the exact kind of response that you want to see. Basic trendline support off of the highs for the year. Came right into this region, just ahead of 3460. You have the median line for the current operative structure off the lows. That was right there at 3460. And again, long dated 618 retracement from the decline off the highs that you made in 2002, 3460. Boom. Quick slight tag, and you want to see that outside move, and you got it. Okay, so the reversal candle is on point. The initial support target that I was looking at was the reversal day close from last month, which was a clear-cut pivot this month. We're moving below that now. Next key support structure, you're looking for just below 32.33. You have the lower median line parallel and a basic 50% retracement of the advance of last month's range. Here's what we look like on the intraday charts yesterday. The proposed pitchfork off the highs, too soon to tell if that was in play. But if it is, we would have wanted to see a pivot right back into that resistance level or the median line and then a move lower. Here's what happened. It's exactly what you got. It's exactly what you got. So the thing broke sub 32.86, 32.88. Again, you saw a quick reversal, check that same median line as resistance, and a move lower. Heading into the U.S. session, again, heading into non-farm payrolls tomorrow, you're likely to see this thing give some back. You're likely to see some chop. Guys who were pressing the shorts on the top side there might start clearing out. You see some people trying to position again for the long dollar move. And I wouldn't be surprised to see this thing rip higher. Long story short, objectively, this is the hallmark of an opening range reversal. So you make an initial range, you break through, you push into a new high. It was a major key resistance confluence. You got a basic trendline support off last week's low break. Momentum sub 40 for the first time this week, and that changes things. Okay, that changes things. So yeah, there's a long trigger here that I had drawn yesterday. I'm not interested in playing long. Rather, I'd let that long take me into a position where I'd be a little bit more comfortable jumping into a short. If we base and we make a break to the upside on the U.S. opening range, the first thing you're going to want to do, guys, is just tack on a quick retracement. The ranges are way too big. We're only looking for 25 pips on this. So again, I have no way of validating this is a low, so there's no merit to this retracement yet. If we get, again, that momentum break pushing through 50, if we get that breakthrough, the near-term or immediate bearish invalidation here at 32.88, 32.86, you'd start to look for these retracements as possible entries back on the short side. Remain bearish the trade, or the structure remains bearish below this region here. So even a rally to 33.80, 100 pips wouldn't be outside the realm of possibility here before we move off again. That being said, looks good. Looks good. Still looking for short triggers immediately while below 33.88, or 32.88 rather, excuse me. If that breaks, You don't get any short triggers here. If this thing travels and makes it through on the US Open, then we'll look for a rally to get back on the short side, which is why I had it on the radar charts, just because from here, there wasn't really much of a trade to try to play that short side unless you played the opening range for Europe, which was the only clear-cut definitive break there. What is that, about 2 hours into European trades when it broke? So to the downside, just to put things in perspective, the one region I wanted just to really highlight here is right here. So a basic retracement for the September range, this is taking your September low and your September high, it gives you a 618 at 3180. If you look at the median lines that we've been following, huge confluence there, huge. So the same one that's on the daily chart, which caught the lows that we made for the month, that coincides right there. You got a basic 618 retracement of last week's, or excuse me, the monthly range, it's 3180. And then you have this median line formation, which, although it broke, you want to keep it on because look how many times this thing came in handy. On the downside stretch, caught the lows. On the break, caught the pivot. And that coincides in the same region. So you're looking at like 3180 into 3195, 3198. Big region of resistance. And again, this doesn't come into play until next week. But to keep things in perspective, leave some room here for some sideways chop action, maybe a test of that upper median line before we move into that key region. So certainly on a weaker dollar story tomorrow would be an ideal play. And on a stronger dollar story tomorrow, it would be possibly a nice fade. So during these market conditions where everyone's focused on the Fed and what the Fed's going to do, and if not, they're going to move on rates. We have 2 meetings left before the end of the year, and every data print is going to become more critical. Okay, so if we do get a major dollar rally on a miss, right? I would actually be looking to fade that. And on the dollar CAD, 3370 is the first area of resistance, or the first region of which I would definitely be interested in trying to look for a short there. Eileen says, will you be looking for a counter trend long in dollar CAD today, early tomorrow, or wait for the short trigger instead? Like I said, Eileen, on this one, heading into NFPs, if the number misses, and you see a real strong dollar rally, I'd be looking to fade that. So tomorrow, yes, on a rally, if we get towards 3370, even if we get towards 3350, it might be a decent region of which we can try to sell it again. On this specific setup, no, I really wouldn't be looking to play the counter trend trade, Eileen. Not through dollar CAD, just because of the ferocity of the reversal that we saw at that key resistance. And if you look at the dollar index, well, that's kind of at resistance too. I know the CAD isn't represented in this, but I don't want to pile into any longs here just yet. Does that make sense? She says, oh, okay, makes sense, right on. I mean, the best opportunity on this one was this move back into the median line last night. So heading into US trade, you're looking for either a break back above 32.86, 88, and be neutral at that point. Or if you get a short trigger into this region, look for that drop into 32.33. It's a nice pivot in price, 50% retracement. Any questions on the loonie before we move off? Keep in mind also, heading into 9:30 at the close of this webinar, guys, you do get some data out of Australia, the RBC Canadian Manufacturing PMI. Not a major market mover, but certainly something that could offer some direction here for the loonie near term. And this is an example of why, Eileen, I'm just thinking about how I can help you guys ascertain when you want to be playing counter trend or not. Look at something like this, where you have some divergence into the lows, right? Then you get a trigger pop to the upside. Price gives you nothing. That's something, if this was going to be a true trigger, and you have 4 tags, so you'd expect it to give you the run. When the market doesn't, That's something that you want to pay attention to. You have divergence into a trigger break. And like I said, 9 times out of 10, I'll take that trade. Here we are, not getting much pop, right? And that's because we're bearish. We're in a downtrend. So on a trade like this might just offer a near-term pop to get you back on the short as opposed to trying to play the rally. I'm not saying this is not going to push higher into US trade. It could, but I need something a little bit more compelling. Let's look at this on the 5-minute. You know what? It actually might have been a decent fade, only we're too far off the lows for me to put a conviction stop. It would have to be below, like, again, that's Sterling CAD. Sorry about that, guys. And even if that trigger breaks, you're not at the lows. Yeah, it's hard to justify a move from here, guys. I'd want to either move back into 32.88, or even if we break the downside, still wouldn't get on and just jump on the trade. I'd look for a recovery to get back with a stop against the opening range high for US. It says that earlier trigger that did not pan out would have not known it wouldn't pan out back then. Right. You don't know. You don't know. So for me, let me take a step back, Eileen. The fact that this trigger is here, right, doesn't necessarily mean for it to trigger a long. A trigger that this was drawn here initially just because if you're in the short, this is when you want to look to jump out, right? We obviously broke the opening range low. We talked about that yesterday for the week. So that shifts your bias to the downside. So this is why, Eileen, before we jump into any scalps, this is why we spend all that time in the daily charts and figuring out the intraday levels. So we have a bias. You should never be scalping a pair that you don't have a bias on. Okay, so we have a downside bias. So inherently, we're not really looking for upside triggers. The upside triggers are more to take us out of a position that we're in, not necessarily to prompt a long. Now, that said, sort of putting it there on paper, we can counter trend trade, absolutely. But if we do, you're trading quarter, half of the leverage that you typically would. And on a move like this, yeah, maybe it does fake you out and you take the position, Eileen, but that's what stops are for. When you take a quick 15, 20 pip stop on a quarter leverage position, not that bad, not big a deal, not that big a deal, right? We're going to have losses, guys. Trading a strategy like this and putting in as many trades as we do on a daily basis, inherently, you will have a larger number of losses. It's just that if we're practicing good risk management and we're staying nimble, we're pressing the trades that are moving with the trend, we're being much more nimble on the trend, on the counter trend trades. That's when really the performance of the strategy works best. All right, so yeah, exactly, Eileen. Remember to look at the bigger picture and keep it on view. Remember one other thing, Eileen, a quick note for everyone here in the room. We're not really necessarily looking to trigger the trade on a 30-minute trigger. Remember, all oscillators are only pegged to their location when the candle closes. So if I'm waiting for 30 minutes for this candle to give out, well, it's a long time. For a near-term strategy, by the time the candle closes, you could have already been out of the trade, right? So that's why we stress the importance of looking at a 5-minute trigger. Let's see what time that was. That time was, what, around 7:30. Right here. Yeah, so you still wouldn't have even squeezed out 20 pips. You're absolutely right. This would have been the trigger for the long against the low. If you're going to counter trend it, you squeezed out maybe like 16. You came right back into entry, and you'd be just underwater right now if you were in that position. But you get my picture, right? Also, Eileen, one last thing to keep into account is time, where we are in the day. Just about to open the U.S. opening range, just heading into the U.S. Open. It's a day ahead of FOMC or NFPs. First day of the quarter, first day of the month. Use some caution here. I'd rather be moving with the trend on all my scalps on a day like today. I still wouldn't even rather counter trend on a day like today. All right, great question, Eileen. I'm sure everyone else in the room has it, so feel free to throw it out. Yeah, that's a huge thing. I really can't stress that enough. Eileen's saying remember position size on counter trends and time. Yes, I get the picture. Thanks for the details again. Many thanks. You're more than welcome, Eileen. And yeah, we don't talk about trade size too much here because again, guys, it's completely subjective. It's really based on your risk tolerance. I can't tell you how much you should be trading with, but I can tell you that when we're trading counter trend, whatever that variable is, X of leverage that you're using on a normal scalp by scalp basis, you want to be a fraction of that. Okay, so either half or a quarter of what you typically would trade. And in that way, since you're counter trading, if the market moves against you and you eat the stop, it's not going to be a big hit. But you always want to be mindful not to press a counter trend trade. Sometimes it's hard to determine if a counter trend or just making a move the other way, calling it a top or bottom or not. Always the question. Eileen, yeah, trying to call tops and bottoms is the biggest mistake we can make, especially in near-term trading. Because every near-term spike, you're thinking it's going to turn, and that's just not the best way to trade, right? So it's really critical to keep that broader view of what's going on in the market. And Eileen, if you get the break, like yesterday when we were talking about this, or when we posted this piece, if you get the break like this, a lot of people will want to inherently just start chasing this and jump into a short from here. You got the test of the median line as resistance, and it held. Once we broke that low, that's a scalp I'll take. Same thing here, okay? I know you want to get into a position, and it might be a counter trend trade right back into 32.88, but if it rallies into here and it breaks, great. I'm still not in the trade. I'll wait for a pullback. Then maybe I'll try the long, since this is the near-term bearish invalidation. If we break the lows and I miss the trigger, no problem. Wait for a pullback where you can get a conviction stop and jump into a position. You're not going to always catch the initial break, but intraday price action, real near-term price action will offer that back and forth where you can get a little bit better of an entry. So I hope that helps, Eileen. I'm sure this is going to be a huge trade heading into NFPs tomorrow. Everyone's going to be looking at it. Unfortunately, it's not one of those scenarios where we have non-farm payrolls on Canadian Employment Day. Those days tend to be super awesome for the dollar CAD. Canadian employment comes in later in the month, so we're going to have to let the dollar do most of the price action tomorrow. Interestingly enough, again, just to take a quick segue on what's going on in other markets, crude oil looking at turn higher. 47.20, still major resistance, and now coincides dead on with a trendline resistance that dates all the way back to the 2014 highs. Oh, yep, 2014 highs. Caught the rally that we made back here in June. Near term, there's a median line structure right off the highs as well. Coincides three-way confluence with a basic 38.2 off the high of the year, and that gives you 47.20 as major resistance. Eileen says, rather looks like it's basing a bit here, making the thoughts about long again, but understand now that you described more ideas about it. Thanks again. For the loonie still. Yeah, and it could be basing. It could be basing, but I don't have to try to take the long off the base, Eileen. If I'm going to try to fade the move, we're going to try to take a scalp, I'd rather the base happen. Let's get a pullback, check the base, then we'll take a long from there. But broadly speaking, we've talked about the risk for a dollar CAD turnaround. We reversed off a major key level earlier in the week. And why try to fight an uphill battle? You know what I mean? You got it, Eileen. Anytime, my pleasure. So we'll be keeping an eye on this as well. Would be pretty interesting if sort of crude runs into 47.20 and you get a hold there as dollar CAD comes into that major support that we talked about. It'd be a nice move, but too early to tell. Any questions? Oh, that trigger actually just gave out. Any questions on the loonie before we start to move off? Just no stop on this loonie trigger. Not sure what you mean by that question. Hey, Valentina, is this DeFelice? Yes. Hey, I got your email. Our intern forwarded it to me. So if there's anything that we're referring to here that you're not getting or doesn't make sense, go ahead and feel free to ask. Where do I find informative material on how to trade on a pullback? So we don't have a specific informational video, Valentina, on how to trade a pullback per se. These are just kind of rules of trading that you pick up over time. As Eileen's pointed out, if you have any specific questions, Valentina, please feel free to throw it out. I'll be more than happy to address them for you. And by the way, I know sometimes I start to speak very, very fast, so if I do that, just give me a quick slowdown and I'll slow my roll a little bit for you, okay? Under the resource page on SB Trade Desk, you'll get a little bit more information on how we trade as far as our strategies. So there's basic resources here on a scalp overview. There's a webinar we did there. Opening ranges, the basic concept. But this is the best place for you to learn, Valentina. If you have any questions, I do want to encourage you to keep them coming. Okay, so that was dollar CAD. Next up on tap, well, there's 32.37, by the way. So we're only a couple of pips as crude is rallying. We're only a couple of pips now from that scalp region that we were looking for. Oh, we actually tagged it, 50% retracement. Pretty big. Okay, Aussie Kiwi. Wow, we're at such a huge level in Aussie Kiwi too. I know you guys remember this slope. Maybe guys that are not in SB, or if you're newer to the service, you might not have seen this before, but we've talked about this slope for months, literally. So the 2014 low, basic trendline support. Who knew this one singular slope that was tagged 3 times in the year, 4th before the break, would still be in play 10 months later? Here's the break. We checked it in January as resistance. We checked it in May, and the early June opening range as resistance, broke through, and it's been support ever since. Yesterday, we came right back into it, closed back right on it. That same momentum support trigger from the lows, still in play. Still in play. So the risk was for a rebound higher off this region. Are we turning bullish? No. To turn bullish on the broader trade, we would still need to clear the 100-day moving average, which is objectively the weekly opening range high. So not surprised to see a nice little pop here higher. Here's what we looked like yesterday on the daily chart. Again, just wanted to really highlight this slope. I did publish a piece on daily effects regarding this setup yesterday. By the way, guys, any of the pieces that I publish on daily effects, you'll find right here on the intraday page at the bottom. And for Jamie, anything Jamie posts on daily effects, you'll find that on his page right here in the corner. Okay, so keep your eyes on those as well. Again, these are just the highlighted setups. We follow them here in SB, obviously, but just for your reference. So the the pivot off this region is what's in focus right now. Major resistance is going to be at the opening range high, that 100-day moving average, and that's what would sort of invalidate the near-term downside bias. Here's what it looks like on the intraday. So the initial level that we were looking for yesterday that we highlighted on the update was for a break of this region. This is a basic channel extending off of last week's Friday high. In fact, if you take the lows from last week and the low opening range for this week, it's the exact same slope. 110.08 is the swing low from Thursday of last week, and that came in right with channel resistance. So this is what would validate or shift the focus right into the opening range high for the week, which also comes in line with the 100-day moving average. So the levels are super clear. I'm personally was looking for the momentum signature to give us a little bit more of a shift on this. Again, the reason that it wasn't on the intraday update is because of the same stuff that we talked about with Eileen earlier today. It's a strong downtrend. Yeah, we're at a level where if I expect to see a bounce, it would be here. But before I get all trying to counter trend it more aggressively, we'd need to see the opening range break to the upside. That doesn't mean I can't trade this long here. You can, but half leverage, quarter leverage, right? Just a fraction of my normal trade size because it is counter trend. Once we break this high and you get an objective price action break to the upside, now near-term focus shifts higher. And you can see, guys, that we've rebounded off this for the last 3 times. This is the 4th time we rebounded just over the last 3 months off this same slope. Real critical area, major critical support into 109.10. If we break below that, there's really nothing to hold this thing from dropping right into the 107 handle, 107.20. This would be the first area of resistance of support at 200-day moving average. And then it also coincides with same slope, right? Nice pivot in price. And that comes in later in the month. So immediate risk is still for a bounce to the upside. Wouldn't want to target anything outside the weekly opening range. If you get a break above 110.60, you'd expect to see a little bit more of a recovery here for the Aussie Kiwi. Here's what it looks like on the 5-minute. Not many operative triggers to work with right now, not off this level. So wait for this chop to clear. If anything, it's still going to be range bound for the weekly opening range is concerned, but it's that break above the 100, the weekly opening range high that would suggest a little bit more of a near-term reversal to the upside. And that is Aussie Kiwi. Any questions on that before we move off? All right. Last but not least, and then we'll jump into your questions. Hussein, I definitely see your question on sterling yen. I like it, but we'll take a look in a moment. Really quick, euro yen. Here's what euro yen looks like right now. So if you guys remember, the Wednesday intraday update or the Tuesday intraday update was looking for a resolution of this range right here. We're looking for a break of either the opening range high for the week to shift the focus back up towards 35.80, which would be an ideal short in my humble opinion. Or you're looking for a break of the weekly opening range low, which would sort of validate the short bias. It didn't break to the upside, so what we expected to happen didn't. 60 held as resistance. He never got a long side trigger to put the trade into effect. We got back below that median line. Let me stretch this out real quick for you. And then we broke below the weekly opening range low yesterday. Okay, so the downside bias, as we noted in yesterday's update, was in play below 34.20. Okay, in fact, It's exactly where we were trading before this thing moved off. So that was actually an ideal entry right last night at that level. Momentum, former support trigger, held as resistance, and we moved right off back into the target at 33.60. The reason I'm not really interested or I'm not really excited about trying to press a short on euro yen here and why we didn't put it on the intraday update is because of just a couple of things. They got a basic trendline support, which was tested here yesterday, showed a really nice rebound, and it confluenced to 786. So I was kind of worried you might get some kickback here. Also, one other thing I wanted to note, Eileen, you're going to like this one. Remember that corrective slope for euro yen that we've talked about for months, also defined like the last 10 corrections? So extended it off the high from the month. We get not as clean, but look at the tags, guys. Resistance, false break, but we pivoted right off it. Break, checked it as support, checked it as support, checked it as support. So that's another reason. I want to see this break below, back below that corrective slope to really press the short side again. So it's really cool how you can find, Eileen saying, very cool with what you found and how it's reacting, right? Now, obviously, Eileen, we don't want to stress any one technical feature. At some point, this slope is going to lose efficacy. But as it stands right now, it's just been a tell. It's just been a tell. Just like when it rebounded, broke and it rebounded off as support, we highlighted that earlier in the week. You got a really nice rally from 34.20 right into 35.08, 80 pip rally to the upside. Here we are checking it as support again, and we're going to want to see that break to really put the shorts in a little bit more of an aggressive stance. Here's what it looks like on the daily. Another reason I'm not too crazy about short scalping this, although the bias remains to the downside, is because of this. Right? You have a lot down here, guys. So many lows, so many close lows, stretch lows from May, July, and it might give us a little bit of a hold here before it starts to move off. So the 50% retracement, actually, this retracement comes in just below. I just wanted to clean up the chart a little bit, but keep that in mind. The opening range high for the week, 200-day moving average at 135. So the NFP play, heading into tomorrow, you're looking for a resolution of this range. The broader bias remains weighted to the downside, sub 35.87. That's last month's open, the September open, and the sliding parallel. So as long as we broadly stay within this feature here, we'd look to sell that rally. Near term, you're coming into some support. And you got some divergence here into the lows. Oh, actually, there's a couple things to look at. Might be a decent play. Any questions on euro yen before we start to move off? Coming into an area of support, you might get a rebound off this level, still looking lower on the broader term, but be mindful of that 33.50, 33.60 barrier before you start to jump into any shorts. Aussie Kiwi we got, euro yen we got. All right, let's jump into your questions. I know we went a little over on time, so I will leave the webinar open until I get all of your questions through. Hussein wants to look at sterling yen. So I did jump into a position here yesterday. Here's what the basis was. Okay. It's kind of messy, so bear with me. There was a very compelling trigger in intraday price that got me on the short, and it was really just a basis of holding against that 82 level, essentially. So you had a 786 retracement, but that's not the real basis of why we took the position. There's a lot, you don't want to necessarily ever stress any one fib. It also completed a basic 618, or 50, excuse me, of the most recent decline, just off the highs that we made the previous day. And in fact, if you take it off the high for the week, It still gave you a range high of the 82 handle. Okay, there was one of them. Okay, pretty sure this is what I was looking at. Again, I don't have that chart in front of me. It's on the live charts. But anyway, 82, 81, 91 was sort of what you were getting on the intraday charts on the 5 minute. You had some real strong waning divergence. And where was the trigger break? Trigger, my trigger. Where were you? That wasn't it. Ah, it was right here. 3-point trigger break. With a really tight stop. The initial move here was where we took the stop, and literally, what was the ATR on this 50 pips? I think I had a 20 pip stop on it, not even, against the US opening range high, which was 57. No, it wasn't that high. But I'm pretty sure it was a 2-to-1 risk reward ratio is how I calculated it. So basically, you were just looking for a near-term pullback. Now the limit for me wasn't the full allotted amount here. The limit for me was just on this stretch. I was looking to play a 50% retracement, so I just simply took a retracement to the high, and the 50 was 81.40. So I think that turned out being 41 or 42 pips from the entry. So again, I don't have access to my account right now, but I'm pretty sure we got taken out on that decline. The limit was right here, and here's a little bit of a rebound. Broadly speaking, the pound yen seems like the trade to play because of what's happening in the pound and what's happening in the yen. So the yen is in a consolidation mode. We're looking for a possible downside break as the favored move. Long story short, you might get a massive rally tomorrow into NFPs as long as we hold key resistance for dollar yen. We'd be looking to fade that. Near-term resistance at the 200-day moving average that takes into 120.80, but essentially sub 121.80. I'd be looking for a short on dollar yen. So we'll have to watch risk. As Jamie's been saying, it's all essentially one trade at this point still. Momentum gives us no conviction on dollar yen. So the variable right now over the next, 24 hours heading into NFPs is going to be the pound. And that's coming into an area of support. A gutsy guy would have gone long on the pound yesterday. I was looking for a drop into 50.86 would have been my ideal entry. The low so far was just 51.06. 50.86 is a basic 618 retracement of the entire 2015 range. Also, the exact stretch low for May. Okay, so you had a lot there. Just below that, the median line off the highs for the year. Right? You didn't quite get the stretch. So we could get some kickback on the pound. I don't have any scalp targets. If I had to, if you held a gun to my head, these are the levels I'd be looking at on the intraday basis. But, it's one of those slow drifters to the downside. So for me, I'd rather let this thing rip up to the upside if I can and try to jump back on the short than try to necessarily play the long side here. Despite the fact that the dollar index is at resistance. Even the intraday momentum, despite the low crawl higher or the low slow crawl lower, largely 50-60, 50-60, 50-60, right? So there's not much momentum conviction either. So the pound yen, again, Hussein, essentially this thing has just carved out a weekly opening range above support, and that's all it's done. Haven't really taken too much of an interest on getting too heavily involved. That was just a quick, real clear scalp trigger to the downside, and you were at resistance at just 50% of that slide on the day. Does that help, Hussein? He says, thanks. Did you have any specific questions on it, man? Feel free to throw it out. He says, no, just want to check it out. Okay. That's the chart to pay attention to, really. And again, once we get a couple of days of October trade here, we'll drop our monthly marker. But till we do, Just want to keep the chart a little bit cleaner here. All right, there was another question on Aussie Kiwi. I got that one. Euro Oz looks like this. Here's the daily. We're at support right now. A trade that we were following last week on SB. Listen, 57, what was the exact level? 57.57, right? Yeah, 57.58. Last month's open. We're there right now. Median line off the lows for September of last year puts the median line right there, right now. At support. Plain and simple. Now with the Euro Oz, it's interesting because while my broader view is to the upside still, the momentum signature again here is giving us some warnings. Warning shots across the bow. Here's 60 break and a test of it as resistance. When we rallied earlier in the week, where did we rally right into? Where did we reverse? Right at the high day close. Almost to the pip. These are all things that you want to pay attention to. Suggests that we could see a little bit more of a substantiated drop if we break below this level right here. Here's what the intraday charts look like. So let me go on the fly here. I actually haven't updated this. So stretch that into the next low. See if there's any overlap. Okay, the 15 to 618. Okay. I'm pretty sure we had a chart on Euro Aussie not too long ago. Euro Oz. Here it is. So here's what we were looking at for Euro Aussie earlier in the week. This is from the 28th. And I just wanted to point out that we essentially came into that major key region of resistance and turned. That major key area of resistance was the high day close that we just talked about in the daily chart, 62.24. Just below that, what you see there in blue was actually a Fibonacci extension also. That level is off the lows from August, and that came in at 62.15. So a major area of resistance. And that was sort of the initial barrier we'd look for. A stretch above that, you'd look for 62.66. So obviously, we couldn't even close a 30-minute candle above it. You saw an major outside reversal candle here right off that region. Momentum just fell off a cliff. And here we are, hundreds and hundreds of pips lower. So the only thing I want to highlight here is this operative formation that we were trading within. You see that level of 60.50? We crashed right through that. We sat there for a while. Once we broke the low at 160, really validated the short bias. So the opening range low gave out yesterday with this drop. You're now testing the 764 at 57.40. You stay bearish on this while below that lower median line parallel. So again, heading into U.S. trade, you're seeing some divergence in momentum. I'm lying. That's barely divergence, so I'm not going to really count that. Oops. And it highlights near-term resistance right here. So if you see it pop back above 58.25, look for a more substantiated rally towards that upper or former lower median line parallel, and that should hold as resistance for another stretch lower. Again, the longer term play here is still bullish, but if we break below this region right now that we're testing as support, you'd expect to see a little bit more of a substantiated drop to the downside. Longer term objectives, you're basically looking for that longer term trend line off of the lows for the year, and depending on where we are in time, you're basically looking at like a 54.60, 55 handle type of play. So I hope that helps, Mark, on Euro Aus. Coming into initial support, might see a rebound off here, broader trade or near term. Look for resistance initially at 58.90, and then at that median line parallel. Possible nice short entries from that region. And again, objective, despite what I'm thinking, saying, despite what Mike Boutros thinks or anything, opening range, Monday, Tuesday high, you break the lows, you look for a Friday low. Near term, the immediate risk is for a break higher though, and then a recovery back towards 59 figure. Mark with an emphatic absolutely exclamation mark says, I'm thinking or think higher now though. Right. And the rebound here wouldn't be so surprised, right, Mark? And that's why we have to have these daily charts in view, man. I mean, so easy to lose sight of things on a 30-minute chart. There's no way in a 30-minute chart I'd have a structure drawn back to the 2014 lows on a 30-minute chart. So it's imperative, it's absolutely imperative that we have these key levels mapped out in the broader trade so that the intraday charts, well, will make things a lot more clear. All right. So I think I got through everyone's questions. A quick update on the IDO search engine. I have a meeting to finalize that with IDO tonight. So we will have more information for you heading into next week. Really excited as far as any of the glitches or technical issues that we were seeing, guys. They should be more or less resolved at this point. There may be a limitation with the time frame of when we can access the terminal, so I will let you know, and we'll give you a lot more information on the announcements page. By the way, I got a couple people asking what that means. This simply means, guys, that there's not enough matches to actually correlate it where it'll give you a probable statistical probability that makes sense. So this is not something wrong. It's just telling you it's not enough. Try changing the time frame, and you'll see if there are any results that come up. So the watch list, again, is going to be where all the currency levels are posted. Explore, again, when you want to take a deeper look into one of these. It'll actually take you right here where you can do a little bit more custom searches on specific time frames and the matches that it finds. Obviously, that didn't find anything. We'll keep you updated on that. We'll get everything kind of wrapped up and ready to go. Again, all current subscribers, you guys are going to have access to this for the life of your account. Add-on value for new subscribers will be $99 a month. So you all will be grandfathered in. It wasn't an easy deal to try and negotiate with IDO, but I thought that was the right thing to do to our clients who have been with us for a while. So I will keep you updated on that front. Listen, heading into tomorrow, once US starts to close out, it's going to be classic NFP wait mode. You'll see markets start to flatline. You'll get the market starting to sap some of that liquidity. So even if you do get some larger spikes, there's not much behind them. So stay nimble, in and out, and best of luck trading tomorrow. We'll pick things back up. We'll keep you updated on SB Squawk, obviously, throughout the course of the day tomorrow as we hit the NFP number, and then Monday's webinar, free public webinar on daily effects, and then we're right back here on SB Tuesday, Wednesday, and Thursday for the meat of the week. Best of luck trading tomorrow, guys, and I will see you next week. Cheers. Best of luck tomorrow.